I'm Emily Chang, and this is the best of Bloomberg Technology, where we bring you all our top interviews from this week in tech. Coming up, hibernation disrupted. U.S. markets enter bear territory as the coronavirus outbreak breeds investor panic. We will break down what it means for tech with Wedbush Security's Dan Ives. Plus, speaking of vulnerable, hundreds of thousands of Americans are working from home amid virus concerns, and hackers are seeking to capitalize on it. We will talk about the potential threat to national security. And no refunds. Hotels and airlines may be refunding trips, but many Airbnb customers may be out of luck. We will have all the details. We begin, though, with the volatile state of the markets and the global economy as the coronavirus outbreak widens. This week, Italy went into a nationwide lockdown. U.S. virus cases spiked and markets plunged. The Dow Jones Industrial Average entered a bear market Wednesday, the S&P tumbling into bear market territory Thursday after President Trump took to the airwaves announcing a ban on travel from Europe.
To keep new cases from entering our shores, we will be suspending all travel from Europe to the United States for the next 30 days. The new rules will go into effect Friday at midnight.
In tech, bets were cast on how much companies like Apple, Amazon, Google, and Facebook would lose in a downturn. And Uber and Lyft shares plummeted on the reality that passengers are sheltering in place. Wednesday, I asked Wedbush Security's Dan Ives for his take on the volatility.
You sort of need to put goalposts around in terms of demand. Right now, I think the street's almost writing off the March quarter. What does normalized demand look like June, September, December? And that's why when I look at our core names, the Apples, the Microsofts, a lot of the FANG names, cybersecurity, cloud, to me, we continue to believe these are buying opportunities and you navigate the volatility. I view it as you look upon what a normalized spending environment is going to be. And even if they stress test the models in terms of an economic downtick, right here, you buy Apple, you buy Microsoft.
Uber ending the day down almost 10%, Lyft down almost 12%. These are names that you think might benefit if people don't want to take public transport. How bad is it going to get for them?
Yeah, look, I think you have to almost separate in tech from a risk profile. I look at names like Microsoft, Apple, some of the cloud cybersecurity names here. These are names that I think I view as golden opportunities for the next, 2-3 years. When you look at Uber and Lyft, right now, guilty till proven innocent stocks, just given exposed to global travel, and obviously that's going to continue to get gut punched across the board. Now, look, Dara and team came out and said not seeing any changes. Profitability is still going to be there. But right now, those are going to be very volatile names. Still like them long term, but in the near term right now, there's really no floor in terms of where their stocks should go.
Is there any specific name that you are particularly worried about? Look, we don't know. We can look out to June, we can look out to the fall, but honestly, we don't know what's going to be happening at that point.
Yeah, look, that's why I think when you look at, let's say, security, like cybersecurity, you kind of have to separate out between some of what I view as like the non-essential purchases versus what you need to spend on. When I look at names like, where like a Fortinet is in cybersecurity, I look at names like a Zscaler or Varonis. Those are names that to us are essentially even a stress test model. You look at some of the non-essential purchases, especially out of these private companies, maybe that are going to struggle. I think also it's going to form what I believe is going to be a surge of M&A across cloud and across tech over the next 3 to 6 months, given some of the valuations we're seeing.
Where are we going to see that M&A? And are people going to be making big buys right now?
I firmly believe if we sit here 4 or 6 weeks from now, we've already seen a handful of M&A. Because right now, in terms of corporates, look at Microsoft, look at Google and GCP. You look at IBM, and you go really across the board in Adobe. I think right now they're continuing to look to expand their cloud sort of empire and expand. And if you look on the private and public side, a lot of these stocks that are now down 30, 40, 50%, look at the valuations. That's why I believe strategic as well as financial buyers are going to be putting sort of the floor in on software over the coming months.
Wedbush analyst Dan Ives there. Now, according to Bloomberg Intelligence, the impact of the coronavirus on advertising demand could drive first-half revenue losses of more than $3 billion for Google and $2 billion for Facebook. And despite the frenzy to buy hand sanitizer, masks, and bleach wipes online, even Amazon's profit estimates are at risk. For more, I spoke to Jitendra Rawal of Bloomberg Intelligence Wednesday.
Basically, we look at it from two lenses. One is the impact that we have seen on the internet sector January and February was none. So whatever impact China internet companies saw in 1Q is what we're going to see a delayed effect hit in 2Q. And that's mostly coming from two angles. One, as your previous segment talked about how hard travel is hit, 8% plus exposure for the industry in general, so that takes a chunk out of that. But also, if you sort of look at it country specific, what does Italian quarantine, for example, mean for these companies, how much revenues they derive. So as these concerns spread outside of China, US, UK, Germany, Japan, France, Italy, these countries account for majority of revenues for most of these companies. And that's why we feel that like a pullback coming from key verticals and also key countries can lead to the U.S. companies seeing what the Chinese companies saw in 1Q, the U.S. impact would be in 2Q.
Let's talk about Amazon. It's a very interesting case. On the one hand, people are flocking to Amazon to try to get hand sanitizer and bleach wipes, and you can imagine that's driving a lot of business. On the other hand, Amazon is the epicenter of the U.S. coronavirus outbreak. They've just closed Seattle area public schools. They're fighting counterfeits. They're fighting price gouging. I've heard people there worrying about whether they can get coronavirus from their Amazon Prime packages. What does this mean for Amazon?
It's a lot of uncertainty on that front. If you actually look at their distribution centers in the U.S., there is high concentration near California, the tri-state area, and obviously Seattle. But we have not seen yet the impact coming through the supply chain. FedEx is going to report next week. I think that'll give us good insights into what it would mean. But historically, what we have seen is this: when supply chain gets overwhelmed, the costs tend to rise. And what that all means is essentially, also they have to pay for employees when they can't show up to work and things like that. The sum total of this is they are unlikely to meet their profit expectations for this year. So what we see happening is expectations for the entire sector really gets probably a reset around April when they report, end of April when they report, and that reset then sort of gives them the room for outperformance in the second half if we see the developments for the rest of the world sort of follow what China did in the last 2 months.
That was Bloomberg Intelligence's Jitendra Rawal. Coming up, hacker alert. Malicious actors are now trying to exploit fears of the coronavirus outbreak. We will hear from a cybersecurity expert next. And if you like Bloomberg News, check us out on the radio. Listen on the Bloomberg app, Bloomberg.com, and in the U.S. on SiriusXM. This is Bloomberg. As the coronavirus continues to spread, hackers are trying to seize the moment. Cybersecurity firms like Proofpoint and Checkpoint have reported surges of phishing attacks and domain name buys related to the virus. The key being malicious actors preying upon people's fears, for example, pretending to sell masks or sanitizers in an email to trick folks into routing them their bank account numbers or other important information. For more insight, I spoke with Jamil Jaffer, Senior Vice President at the cybersecurity firm IronNet, Wednesday.
What you have is a series of capable actors, both nation states and criminal groups, who are looking to use the coronavirus epidemic to spread malware, essentially to get into people's email because they're interested in clicking on things about the coronavirus and establish either long-term footholds or to distribute ransomware or the like in this current threat environment.
So talk to us about the threat level here in cyberspace, given what is happening, the uncertainty, so many people working from home. Is there a threat to our national security right now?
Well, I think there is. As we know, Emily, there's been a long-term threat from intellectual property theft, from potential activities against critical infrastructure. But as people start to be concerned and start to work from home, as you say, a lot more of our economy depends on highly secure cyber infrastructure, because that's what we're utilizing now to conduct our day-to-day business more and more. And in this environment, it's just even more the case. And so obviously there are concerns. People recognize that this is a situation, and there are at least criminal actors starting to exploit this capability. And we'll see what nation states do going forward. But we know that they're going to use this capability to at least get in place long-term hooks.
So what are companies supposed to do? What are individuals supposed to do if they're working from home and maybe don't have all of the same security protocols?
Well, I think one of the keys for companies is to be using VPNs, virtual private networks. Even for individuals, you can buy VPN software. You can use it, on a monthly basis. And that way, at least your communications are secure. They're encrypted over a tunnel. You can also use the latest in behavioral threat detection and classic threat detection to protect your networks if you're a company. And part of this, too, is companies working together with one another, industries working together with one another in a collective defense posture to defend against these threats as we enter this new environment where we're all working from home and recognizing that this is just how it may be for at least a while to come.
Jamil, you were at the RSA Security Conference here in San Francisco just a couple of weeks ago, the same conference that now 3 people attended and have now tested positive for COVID-19. One of those folks is sadly in a medical-induced coma. This is a huge gathering for your industry. You were there. I'm curious how this is impacting folks in your industry right now.
Sure. Well, people are taking wise precautions here. Obviously there are 36,000 people at the RSA conference, only a handful that apparently had this issue. But the concern is, you don't want it spreading. You don't want it to be a point of spread. And so a lot of people are staying at home. A lot of people are working from home. We've seen some major tech companies announce that they're going to have their staff stay at home, not necessarily because of RSA, but just more generally a better way as a precautionary measure. And at least for this industry, you want to be cautious. You want to be careful. And so we'll see what happens as this plays out. We're now about 12 days out from RSA ending, 11 days. And so, the incubation period is thought to be 14 days. So by the end of this weekend, we should know better whether there are further cases. But at least for now, I think people are better to take precaution than not.
That said, the disease continuing to spread. Earlier today, the buildings of CBS in New York City were evacuated. CBS is now saying, and this is just crossing now, that 2 of its New York-based employees have tested positive for the coronavirus. They're asking employees in at least 2 of their buildings to work from home. Jamil, this is certainly going to get worse before it gets better. What are you most concerned about from a national security perspective?
Well, I think, honestly, Emily, one of the things is people just over panicking and getting too worried and actually not engaging in their normal day-to-day business, their normal economic activity. Look, this is a challenge, obviously. We've seen a lot of public spaces be left behind and people sort of staying at home. But you can still get your work done. You can still participate in the economy. This is not the zombie apocalypse, as it were. And the thing is to do is just to be safe, take normal precautions, and in the cyber arena, take smart precautions. But, don't stop doing business. Don't stop participating in the economy. The general variables in our economy and the like are good and they're solid. What we want to avoid is a panic here, I think, Emily.
That said, what would you like to hear from the White House at this point? I mean, I think some of the panic might be tied to the fact that, we're not getting a lot of information. The president has been due to unveil the stimulus plan. That hasn't happened. The daily briefing today by the vice president has been canceled. What should we be hearing from the White House?
Well, look, I mean, obviously the WHO today declared it's a pandemic, 114 countries affected, over 4,000 people dead. This is a huge concern. It hasn't been a pandemic since H1N1 years ago. And so what we need from the White House is leadership, right? We want the White House to come out and tell us what the plan is, tell us they're going to stimulate the economy. We know these things are going to happen. We know the Fed's going to continue to cut rates to the extent they're able to do so. And for all we know, they'll engage in quantitative easing, too. So I think the economy will stay strong. I think the government's going to do the right thing. All we need from the White House, and frankly, our leadership in Congress, too, is to step up and say, look, we will be there. We'll step in and do what's necessary to keep the economy going and keep the country's work moving. As long as we get that, I think we're in solid shape.
That was Jamil Jaffer, Senior Vice President for Strategy at IronNet. Coming up, if you're trying to cancel a trip, don't expect a refund necessarily from Airbnb. We will have all the details and disgruntled travelers next. Plus, later, schools and universities around the world continue to shut down to prevent the coronavirus spread. How can kids keep learning at home? The push to get classes online is next. This is Bloomberg. Travel, one of the industries being hardest hit by the coronavirus outbreak. If you are canceling a trip, hotels and airlines may give you a refund or a voucher, but if you book through Airbnb, you may be out of luck. Unless you've booked a stay in China, Italy, or South Korea, Airbnb is enforcing no cancellation policies or allowing hosts to decide. That leaves out 97 other countries where the coronavirus has spread. I got details from Bloomberg Tech's Olivia Carville.
We're seeing a lot of frustration out there at the moment from guests, people who have booked trips years in advance, who really want to go, and unfortunately now, as coronavirus has spread right across the world, it has reached pandemic status. Health authorities are advising people against travel, and families like the Ostroff family that you're talking about, who we featured in this article, think it's in their best interests to protect their family in terms of safety, but also to try and avoid actually spreading the coronavirus. Don't want to take the trip anymore. They're trying to cancel. Their airline and their hotel have both refunded them, but unfortunately, Airbnb is a different position. They've told the family that according to the CDC guidelines, they could still safely travel to Japan. From the Ostroff's family position, they have a 10-year-old son and they just don't think it is safe right now. So we're hearing from a lot of people at the moment who feel as though Airbnb is putting their health at risk by giving them unsafe travel advice and encouraging them to continue to go by not offering a refund.
Right, and I actually have a line from your story from Airbnb's official response to this family saying, if the CDC's precautions are followed, you could safely travel to Japan. Well, nobody knows if this family could safely travel to Japan or not, for sure. Now, Airbnb has responded to this. They're responding to all of the frustration out there, saying, we are a two-sided marketplace. It's not just you travelers who are the customers. It is our hosts who are the customers. Tell us a little bit more about Airbnb's side of the story here.
Right, so Airbnb is in a particularly difficult position here. We know that the travel sector has been the hardest hit. Airlines are cancelling flights, hotels are closing, businesses are prohibiting travel, and events are being cancelled right across the world. But while airlines and hotels only have to deal with the customer, Airbnb is a two-way platform. So on Airbnb, you have a host who will rent out a home, and you'll have a guest who intends to stay there. And from their perspective, every time a guest cancels, their host is left out of pocket. So traditionally, Airbnb has always had a refund policy that was kind of up to the host's discretion. They could choose whether they wanted to have a flexible refund policy, which means that you could cancel up to 48 hours before you arrive, or a strict policy, which effectively says no refund at all if you cancel. And the problem the problem we have here is that they've created this extenuating circumstances policy around coronavirus, but as you said, it only applies to 3 countries, and a lot of people are traveling beyond China, Italy, and South Korea and don't feel safe.
Right, and in some cases you found some anecdotal stories where perhaps the host would refund the money, but Airbnb still took its fee. Meantime, this is a company that was planning to go public this year at a $30-some billion valuation. If you look at a company like Marriott, that's $33 billion market cap. Do we buy the idea that Airbnb can't cover for these travelers in a crisis like this?
We know that they have been cash flow positive and they have turned a profit in 2017 and 2018. Believe that they did swing to a loss in 2019, but it's yet to come out. And we do know that for Airbnb, they were founded in 2008 during the global financial crisis. And this is the second biggest challenge the company has faced. And unfortunately, it's coming in the year that they intend to go public.
Bloomberg Technologies' Olivia Carville there. Well, Tesla overtook Boeing Wednesday as the most valuable industrial company in the United States. The electric car maker's market cap topping Boeing's by $10 billion. I spoke to Bloomberg's Ed Ludlow.
It's as much a story about Boeing's pain as it is about Tesla's gain, right? You know, Boeing has this double whammy where it's dealing with the coronavirus, the impact on travel globally. People are traveling less, they're definitely flying less.
And they're continuing to deal with the 737 MAX issues
and we're approaching
the
the 1-year anniversary of the 737 MAX being grounded. So if you look in the decline of Boeing shares so far this year, that's kind of how Tesla's managed to creep up. But to be fair to Tesla, it's amazing that we're even talking about them in the same breadth as a Boeing, you know, this legacy, huge industrial name that has $80 billion of revenue last year. Tesla did $25 billion of revenue last year. And it's this kind of crazy concept that investors have been talking about, right? They've been talking about how Tesla is becoming a quote unquote real company that is producing real things in real factories. There's a growth story there. Tesla shares are up 55% year to date. It's expanding its production capacity to 500,000 vehicles this year, and it's increasing its base of industry where it wants to manufacture. Already up and running in China, plans to get the factory up and running in Europe by next year, and now, you know, perhaps a new factory here in the US as well.
Right, Tesla's been a real company for a long time, let's be honest. There's an irony here in that Elon Musk tweeted last week that the coronavirus panic is dumb. Meantime, today he's tweeting about opening new factories in the United States.
Well, on coronavirus, we actually don't know much about how it's impacting Tesla. On the last earnings call, January 30th, the CFO said, look, it's going to delay production in China by one and a half weeks, impacts profitability, but we haven't heard much more. We don't know what the situation is inside the Fremont factory over the water from us. For example, you know, Elon tweets, he draws attention away perhaps from the company and onto himself. But, you know, they're looking at this new potential factory here in the United States to produce the Cybertruck, this futuristic pickup, and even a Model Y factory that they hope will be on the East Coast, according to another tweet by Elon.
Well, and Tesla hasn't been immune to the volatility over the last few days. I mean, the stock plunged almost 14%.
Yeah.
Monday regained about half that. Yesterday, down again today. You have to think if there's a broader economic downturn, that impacts a car maker.
So I guess there's two schools of thought here, right? The first is like, where is Tesla's demand coming from? And this ties into the Cybertruck debate. There's signs that demand for this, what was once thought as concept vehicle, is really strong. In a market for pickup trucks, which is kind of entrenched with three players. And so analysts raised that, is it just the diehards, the Teslarati, the people that really believe in the concept that will go for it? Or is it this idea that if the world is going to shift to a renewable energy, sustainable source of energy and electric vehicles, that Tesla has first mover advantage? And even in a downturn, even in a recession, people still buy vehicles, right? Yes, used vehicles do better than new cars in a recession, but Tesla is pretty much the sole player right now in EVs. So it depends what kind of support they get from the core base, but also the broader consumer base as well.
Does Tesla have an advantage over other car makers in this moment?
We've done some reporting around this, and part of the big gain that we've seen in the first half of this year comes from this idea that technology-wise, Tesla could be 3 to 5 years ahead of the big Germans, right? This is what's so incredible about this story. We talk about Tesla's market cap. It's greater than Volkswagen's, yet Volkswagen produced 10 million vehicles last year. Tesla produced 360,000. But what the street is looking at and what investors are looking at is saying, well, look at the battery tech, look at the range, look at actually the volumes they're producing. And no matter how many billions of dollars these big legacy European makers are putting into EVs, they're yet to build a single viable, competitive vehicle.
Bloomberg's Ed Ludlow there. Coming up, as the coronavirus spreads globally, workers head home en masse. Could virtual reality help a remote workforce? That's next. And Bloomberg Tech is live streaming on Twitter. You can find us there at Technology, and be sure to follow our global breaking news network, Quick Take, on Twitter. This is Bloomberg. Welcome back to the best of Bloomberg Technology. I'm Emily Chang. Magic Leap, the startup that raised more than $2 billion to build an augmented reality device, is exploring options, including a sale that could fetch as much as $10 billion. According to people familiar with the matter, the company is working with an advisor to consider strategic options that could also include forming a partnership or selling a significant stake ahead of a potential listing. Before news of a sale broke, Bloomberg's Ed Hammond and I spoke to Magic Leap's Chief Product Officer Omar Khan about their technology.
We have been innovating in the spatial computing space for 8 years. We're actually building a technology that is for all day, every day, and everyone, which includes both enterprise and consumers. Now we know the inflection point for enterprises is coming earlier. IDC identifies the XR space, which is kind of inclusive of AR and VR, as a $128 billion market opportunity in 2023. Enterprise taking off first, and then the consumer following with an inflection point kind of out in the 2023 timeframe. And it's really aligned well when we see the 5G deployments becoming broader and driving adoption across the consumer space. Now, we're seeing early consumers adopt even today, but the inflection point for mass consumer adoption starts to happen in the 2023 timeframe. What we've got now is the enterprise customers really starting to drive adoption across many different use cases. We've got hundreds of enterprises that are using Magic Leap today for pilots and proof of concepts and early deployments across training use cases, across communication and collaboration, which is incredibly important right now as people need to collaborate and communicate across time and space because they can't get on planes and go to meetings or go to conferences, as an example.
Now, I'll never forget Magic Leap's first demo and the early concept videos of checking email in the air and the holding the elephant in your hand. We haven't seen that yet. How transformative is Magic Leap's technology, which was supposed to be magic mixed with reality? How transformative is it really going to be?
Honestly, it's truly transformative. And actually, both the examples you used today, you can do today. You can hold the elephant in your hand. Actually, I mean, on my team alone, I've got multiple employees kind of living in Magic Leap all day. I've got a couple of folks who've gotten rid of all the monitors on their desk, and they come in the morning, they put on Magic Leap, and they're working. They've got 5 or 6 monitors up. They've got video playing in the background. They've got a conference call or a video conference going with their colleagues around the world. So these use cases are what we are deploying today. They're actually live today, not just internally, but also with customers. We've got a customer in Paris, BNP Paribas, which is a large real estate and banking customer of ours. And they're using Magic Leap and software called Spatial to connect their employees around the world. And they're also using it with customers to give tours of projects coming out of the ground. And their initial intent was really to become more green and reduce the carbon footprint, not getting on planes. But given the backdrop of what's going on today in the world, it's actually helping people collaborate around the world.
But Omar, you're talking about coronavirus obviously being a boon to the business because you have a lot of people who can't go into work so they can use it at home. But the consumer market isn't really developed yet. How do you get the product to the consumer, because that surely is a much, much deeper market than the enterprise piece?
Yeah, I mean, like I said, starting in the 2023 timeframe, along with our carrier customers, we're starting to see that inflection point happen. We've got Magic Leap 1 today that we've got enterprise customers adopting and doing proof of concepts and pilots, and they're excited actually about our next generation product, Magic Leap 2, which is coming out next year, which is a significant step forward for the industry and for Magic Leap. It'll be half the size of Magic Leap 1, and it'll be double the field of view of Magic Leap 1. And it really removes the compromises that you have to make in today's XR platforms from an experience perspective. And we've got Magic Leap 3 right behind it from a roadmap perspective coming out. And we believe those products get us towards that vision that we're driving, which is all day, everyone, everywhere. We're not building a helmet that you have to wear for 20 minutes at a time for a use case, and we're not building a flimsy set of lenses that don't deliver the value of true spatial computing.
And some of your competitors, I mean, obviously Microsoft are building out their own product. Apple, I think, are in the space now. Facebook have said they want to do about $5 billion a year in the space. Isn't it time, as a company like Magic Leap has grown very fast, to maybe look at getting some funding through the IPO market or potentially taking on new investment?
Look, I can't speak to those conversations, but what I can tell you is in those 8 years, as we've been building out that roadmap, we've built a very significant, broad, foundational IP portfolio that's really put a moat around our leadership in the XR space. And it makes it much more difficult for competitors to enter the market, much more costly, and takes a lot longer time for them to get there. What we've got is we've got our second generation product, which actually continues to expand our leadership coming out next year, and then our next product right behind it in the roadmap. And that gives us tremendous confidence given the fact that the market is significant, over $100 billion just 3 years away. And for us to grab a disproportionate share of that market, and that's what our investors, our partners, our customers, and our employees are excited about, and we're confident in it.
That was Omar Khan, Chief Product Officer of Magic Leap. Meantime, Xerox is out in the market trying to raise cash for the largest, or what could be the largest, hostile takeover in years. Despite recent rejections from HP, Xerox is persisting in its bid. Our Ed Hammond spoke to Kim Fennesbresk, who is one of the Xerox nominees to the HP board. He's also the former CEO of Cowen.
I really have no comment on what I would do as an operating board member in terms of the operations of HP, but what I would do, assuming the rest of the board agreed, I think we would engage with Xerox in having meaningful discussions about whether or not accommodation made sense, and if it did, on what terms.
But the current board have had offers. They've rejected those offers. They've given fairly detailed reasons for why they rejected. Do you think they were wrong to reject?
Yes, I think they were wrong to reject. I think they rejected on incomplete facts. I think they have not done due diligence on Xerox. They've not allowed.
Well, they've not been able to.
Well, but they have not engaged, and I think Xerox has expressed a willingness to engage and have mutual due diligence to find out, are the synergies real? What would the capital structure look like? What would the allocation of value be? All those things are still up in the air notionally because no one's had it set down.
Okay, but some of the things that the HP board and management have said are bad about this bid or would be damaging about this bid, do you disagree with them? They say that it would put undue leverage on the combined company that would be very detrimental to the HP shareholders.
Yeah, so start with that. So the leverage, Xerox believes that would still be investment grade after the transaction. And if you look at Xerox's projections, which are projections, but I find them credible, in 2023, the leverage would be 2x. So that's highly manageable, and that's, in fact, a good capital structure. So I don't think there's any real risk to the capital structure.
What about the characterization of Xerox as a, I think, quote, desperate company that really needs a deal to survive?
Well, that's a pejorative comment, obviously.
And
having been in this business myself, I've made a lot of those comments myself, but I never meant them when I said them. I think in this case, I think it is not a desperate company. In fact, it's got a management that is quite skilled at negotiating desperate times. And I would hardly call these desperate times. Well, not the current times, but Xerox's times as desperate times. And they have managed in a declining revenue period. They've had a total shareholder return in the last year of almost 100%. And so I think that this team really knows how to manage, and I don't think they feel desperate or they're acting desperately.
All right, so theoretical situation, you get onto the HP board. Do you get excited about $24 a share? Is that enough?
Do I get excited? You know, I'd have to be inside HP to really get a sense of that. But I think as an HP shareholder, I would say $18.40 in cash. That's what higher than the cash was before the announcement, and half the company. I think it's a no lose, frankly.
Let's talk about the cash piece, because Xerox obviously reaffirmed this morning that they would make the offer as stands. Have they got the financing? Does that change in this market?
No. As far as I know, that a firm commitment is a firm commitment, and this would not qualify as a material adverse change. It would get them out of that commitment. So the banks are in, and I think Xerox reaffirming it confirms that they're still in.
And when you look from the outside at the HP board, obviously you have to have conviction personally that you would be a better steward of capital for the shareholders there. Bearing in mind the complexities of running a business like that, and only a small piece of it is printing, what gives you the confidence that you would indeed be a better director?
I don't want to personalize this against any HP directors. I'm sure they're all capable people. I think they have a different...
But you're going to have to replace one. I mean,
yes,
if this
exactly.
works.
And probably the weakest. But having said that, I think it is clear that I have a different philosophical approach to the activity going on today. So whether I would insist that HP be run differently, I probably would in some respects. I don't know what those are yet, but I can make some observations. But I'd certainly say a credible party has come, made an overture, wants to engage in discussions about a combination in an industry that needs consolidation, and I think we should engage in that conversation.
Is this board, if it gets in, going to be a Xerox deal at all costs?
I don't believe so. No, it can't be. I think it can't be, and this sounds a little cliched, but there is, when you go on a board, you do have a fiduciary obligation. You are working for the owners, right? You are not the owners. You are the board, which represents the owners, and you owe it to the owners to give it a look.
That was Kim Fennesbresk, Xerox nominee for HP's board and a former CEO of Cowen. Coming up, are parents prepared to teach their children in the midst of school and university closures around the world? We'll speak to the CEO of an online education company next. Plus, how one of China's largest e-commerce companies is faring as the coronavirus spreads around the world. This is Bloomberg. Now to the impact of the coronavirus on education. Harvard, Yale, Cornell, and many more schools and universities asking students not to return to campus after spring break and moving classes online. There are questions for schools around the world now, from preschool to high school, about not just whether to close schools, but how to keep kids learning in the meantime. I spoke to Sal Khan, founder and CEO of Khan Academy, a nonprofit educational organization that offers online education videos to over 93 million users globally.
There's a lot of actors who are trying to put things together so that we can keep students learning, essentially. The reality is, I know there's some school districts, obviously internationally, places like Japan and South Korea have already canceled schools nationwide. And it's in the US, we've already seen school closures, and it's probably going to accelerate over the next couple of weeks. And the reality is, if they start in the next few weeks, they're likely to last through the summer because we're not going to see the peak cases for probably several weeks now. And one logistic change that could happen, although there's a lot of complexities there, is they could shift summer vacation up a few months and just resume class in the back half of summer, which could simplify a lot of things. But assuming that's not going to happen, or you need some type of a hybrid, a lot of districts are thinking about how to virtualize. And there's a lot of complexity there if they can even operationally do it. But even if they can, they're thinking about equity issues of, do all students have access? And so, our goal as a not-for-profit with a mission, free world-class education, we're thinking about how do we put up all of our materials together. They're all free, they're all accessible. As much practice as students need to get, as much feedback. There's even ways for teachers and parents and district officials to keep track of what students are doing. How do we make it very easy to use if students are home for an extended period of time, possibly for months, and they can keep learning?
So how do you structure a day of learning at home? What can parents do? What can teachers do?
Yeah, my general sense is to try to keep it as simple as possible. If I have young kids, let's say elementary school aged, I would say if you could do even 2-3 hours of focused learning a day, that would actually be great. I would really focus on the basics, maybe an hour of reading, an hour of math. That reading can really just be focused on the student being able to read, and that you as a parent being able to spend time talking about what they're reading with them. If they're even younger, you can read with them for half an hour or an hour a day. For very young kids, we have something called Khan Academy Kids, which is an app that has actually over 100 titles inside of it and has other things in math and science and social emotional learning. It's all free. It's all non-commercial. If you're going to elementary, middle school aged, we're actually working on a reading list that we can provide for parents. And then the math side, that's where we feel like we have families covered from as early as pre-K all the way through high school and college, to statistics, calculus, algebra, whatever they need. And if students are able to put in, I would say 2 30-minute sessions a day of focused practice on Khan Academy, getting as much practice, as much feedback, the system will progress them along, whatever they need to learn master concepts, they'll be able to get their bases covered. Above and beyond that, if you can do an hour of writing a day, some type of journaling, even thinking about what's going on in the world, that's interesting. And then for high school students, we have even more. We can support them for things like AP classes, their high school science classes like biology, chemistry, physics. We have content in economics and in American history and government and civics as well.
Okay. Do you have any lessons or anecdotes from across Asia where, as you mentioned, some students have been home for weeks, where things are working and where things might not be working?
Yeah, it's coming in bits and pieces. It actually first came on our radar last week when a teacher in South Korea that had to virtualize is using Khan Academy heavily with his students. And so that's when the first hit us, and wow, we have to start putting a game plan because it's really our duty to us as a NGO.
So if there are widespread school closures here in the United States for an indefinite amount of time, how well off do you think our children will be?
It's obviously not great. It's not an ideal situation, but as much as possible, I think we can try to make it a glass half full type of situation, where if they're able to use the types of online materials I just talked about, and potentially continue through the summer. Part of the glass half full is whatever patterns, if we can get people learning when the school closures happen, that could actually set a new pattern for what could happen over the summer, where you've traditionally had what's called the summer slide, where kids not only aren't learning, but they forget. So that is an opportunity of sorts. I hope that districts are able to provide some support, especially for kids who don't have resources at home or internet, maybe keep certain computer labs open. And it wouldn't be for all of the kids, so the density of kids coming on site will be lower, so there's less of a chance of spreading the virus.
Khan Academy founder and CEO Sal Khan there. Still ahead, now that the coronavirus outbreak has begun to stabilize in China, e-commerce platform Pinduoduo remains positive despite its recent sales miss. We're going to hear from the Vice President of Strategy next. This is Bloomberg. Several companies are expecting headwinds to their businesses from the coronavirus pandemic, including Chinese e-commerce giants like Alibaba and JD.com. Pinduoduo, China's third largest e-commerce platform, is no exception. The company reported fourth quarter sales that missed estimates, but the firm's vice president of strategy, David Liu, is maintaining a positive outlook. He spoke with Bloomberg's Haslinda Amin.
In terms of impact to e-commerce, we have seen actually on the onset of the coronavirus outbreak in China that e-commerce actually played a big part in supporting and stabilizing the life of their people. Pinduoduo is actually the second largest e-commerce platform in China in terms of user count. So around 600 million people have actually come to rely on Pinduoduo for their daily necessities. In a trying time like this, our priorities are actually with our users, so we have proceeded to provide subsidies actually against medical supplies, daily necessities from the very beginning when we see surge in demand outpacing the supply and strong disarray in the market. That said, the other thing I would point out is that Pinduoduo, about 13% of our 1 trillion RMB gross merchandise volume is actually in agricultural produce. So Pinduoduo has been a very strong online platform for purchase of agricultural products. As you think about people staying home and looking for food supplies, we actually leverage our network through this very difficult time to make sure that farmers whose businesses have been impacted because of disruption of transportation are able to make the goods available efficiently to the online consumers. And at the same time, we spend a lot of efforts coordinating logistics to make sure that the goods are actually delivered promptly to the users in the comfort of their home.
But there has been a disruption in the supply chain, and even Alibaba has come out to say that if the virus continues, if it persists beyond even 1 quarter, that could be an impact on earnings and consumer spending.
Yes, absolutely. We also expect the first quarter, because of the coronavirus, to see a negative impact to our GMV and to our growth. That said, we have actually been observing very positive trends in terms of consumer behavior. As China began to resume work since the 10th of February, so we are roughly about a month into the resumption work, we have seen 90% recovery in the delivery network in China, and we have seen pickup in activities among our merchants and users. So take end of February as an example. We ran a 3-day campaign of our 10 billion RMB subsidy program in connection with return to work theme. And what we have actually seen is that we sold 50,000 iPhones and 20,000 Mac lipsticks within the first 12 hours of that. Right? So consumer demand remains very strong, and outlook for the year remains positive.
Is there a risk for your smaller merchants?
Yes, the small and medium merchants on our platform are more exposed because of cash flow concerns, because of the supply disruption, inability to fulfill, or higher cost of logistics. So we as a platform have actually set aside 1 billion RMB of reserve to provide a subsidy program of 2 to 4 RMB per order to help ease that transition back to normal.
PDD announced its results today, a 90% increase in revenue, but still fell short of expectations. Are you at all disappointed?
On the contrary, we are actually very positive on our own results. We believe the fourth quarter was actually very, very strong. First of all, we hit a new milestone in terms of gross merchandise volume. So we reached a 1 trillion RMB mark in around 4.5 years. Secondly, we added 50 million of active users in the fourth quarter. That is about twice of our nearest competitors. So we continue to see more people coming to our platform, becoming more engaged on our platform, and we think that bodes well for the longer term. Monetization or revenue, as you say, is not our focus today. Our priorities are actually on improving user engagement and user interactions.
You are competing with the likes of Alibaba. Alibaba is targeting about 1 billion users, active users, by 2024. Can you do that earlier?
Well,
in a shorter period of time?
Let's just say we added 50 million users in this last quarter, and that's 2 times of what our competitors have added to the platform. And we see no reason why that pace should discontinue, and it's just a matter of time.
What is your 3 to 5 year strategy? I mean, PDD has always been seen as an e-platform that's targeting the third-tier cities, for example, unlike Alibaba, which is looking at the first and second tier. Are you maintaining that strategy, or would you be tweaking that to compete effectively with Alibaba?
I'm actually really glad you asked this question because, and let me take this opportunity to clarify the misconception. PDD from the very beginning was designed to be a platform that serves the entire population of China. So if you actually look at user distribution on our platform, it is very much like China's distribution between urbans and the rural areas. But more importantly, as we begin to win more trust with our users, begin to build more engagement, we're actually seeing activities pick up from our users in first-tier and second-tier city. For example, take November last year, 45% of our gross merchandise volume were actually generated by users in the first-tier city, buying things like electronics, high-end cosmetics, imported fruits. So as a strategy, I would say our platform is continue to understand and through promoting interactions between our users and to understand what they may be looking for and make available a greater breadth of products, a greater diversity, and continue to encourage them to share the experience with other people.
Black Friday last year, you partnered with Amazon, which was seen as a pretty successful partnership. Any reason to think that you'll deepen that partnership with Amazon?
Amazon and us partnered during the Black Fridays to bring 1,000 SKUs available to the Chinese customers. This is consistent with our strategy of bringing differentiated shopping experiences to our user, giving them access to better, higher quality product with greater certainty around authenticity, and also at very compelling value. And we will continue to explore such opportunities and collaboration going forward.
That was David Liu, Pinduoduo Vice President of Strategy. And that does it for this edition of the Best of Bloomberg Technology. We're going to bring you all the latest in tech throughout the week. Tune in every day, 5 p.m. in New York, 2 p.m. in San Francisco. We're also live streaming on Twitter. Check us out at Technology. And be sure to follow our global breaking news network, Quick Take, on Twitter. This is Bloomberg.